Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. Thanks for tuning in today. We're so glad that you're here, and we're so glad that we're here. We've got a lot to talk about today, so we'll get started right away. If you're tuning in for the first time, Financial Issues is a ministry that helps to educate people about financial issues from a biblical worldview. So our calling is to equip the saints of the church to educate, edify, and encourage the saints of the church in the ways of stewardship, specifically to defund darkness through a biblically responsible investment strategy and to be a joyful, generous, and obedient giver. We call that funding the light. So on today's show, we're going to get to your calls and questions. It is Rapid Fire Friday. 610-363-1110 is the phone number that you can call. You'll be the first caller in the call queue. We'll also get to the latest economic information, which we'll do here shortly, getting you caught up and in the know, and we'll get encouragement from the scriptures as always. As a reminder, if you're a partner or if you're not a partner, we have a way for you to get directly involved right now. We recently issued a sell alert for Tesla stock based on biblically responsible reasons, and we've drafted a petition. We're asking you to go to the webpage and to sign it. But first, let's get you caught up. At Financial Issues, we help you to stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets and help you understand how that impacts your own personal financial issues. So I've got several takeaways from this week that is ending August the 9th, 2025. Let's start with the latest debt data. Nope, I'm not going to go on a tirade about the U.S. government debt or deficits that we're running. I'm going to talk about the individual household. The individual household debt has jumped by $185 billion last quarter. We've now hit a new record high of $18.39 trillion in household debt. And that's just one part of the story. According to Fox Business, student loan delinquencies have surged to their highest level in 21 years. New data from the Federal Reserve shows that the share of student debt that's 90 plus days past due climbed nearly 13% at the end of June, up from just 8% in March. To give you some perspective on that, before COVID, those delinquency rates hovered between 9 and 10%. Why is that important? Because as Christians, we need to be wise when it comes to using debt. Now, part of the thing that's happened is that students who had loans were given a pause or a hiatus during COVID, which was almost perpetually extended by the Biden administration because of, their desire to forgive lots of the student loan debt in this country. Now that hiatus has expired, and students who have borrowed money to fund their school educations or their college educations are being their payments are being reinstituted, and many are falling behind. Why is this important? Because as Christians, we need to be wise when it comes to using debt. The world and even our government, especially our government, are modeling some dangerous financial habits for us. We are being conditioned to live in a state of perpetual debt. The government prints money at will to fund all kinds of things that a government has no business paying for. Shifting gears a little bit, mortgage rates and housing affordability, another topic that we talk a good bit about on this show because we know a lot of your lives in a really big way. The current 30-year mortgage rate is now sitting at about close to 6.5%, with FHA and VA rates flashing 6.12 to 6.13% most recently. Mortgage rates, to give you perspective, historical perspective on this, began to rise from it first breached 6% in the fall of 2022. Mortgage rates peaked near 8% in 2023. And while they come down slightly, they're still historically higher than the 4 to 5% rate range that we had been accustomed to in the decade preceding the pandemic. Now, that's only part of the affordability problem. Home prices have soared by 60% over the last 6 years. That increase in home prices, maybe more than mortgage rates, has made the American dream of home ownership feel completely out of reach for many. I know I'm probably preaching to the choir for those of you who are trying to acquire that, attain that dream of home ownership. So here's the dilemma. How do we get home builders to build affordable homes when mortgage rates are high and demand for homes is mortgage rates, and land, labor, and regulatory costs are so high? Well, part of the answer lies in getting inflation stabilized, which I think we've done. We're pretty well there. Maybe prices aren't at the inflation isn't at the 2% target for the Fed, but their goal is not 2%, it's price stability. And I think we're pretty well there. The other part that the government can do without getting too involved in the private market is to loosen regulations. In fact, causing them to go the other way, get their thumb off of top of all of the home builders and start to ease some regulations, and that can go a little ways to help. Turning our attention to the markets, this week the markets took a bit of a breather from their recent trend of making all-time highs just about every day, multiple times a day, but they're still trading very close to record levels. So here's the breakdown since last Friday. No new highs this week, but the equity markets are still hovering near records. Just in the last week, the Dow is up about 0.75 of a point, the S&P's up almost a point and a half, and the Nasdaq's up almost 2 points. The pre-markets this morning are indicating a positive open, somewhere around 20 to 25 basis points higher than what they closed yesterday. So we talked about this the state of the markets being at all-time highs in our weekly commentary to our partners on Tuesday. If you are a partner, I would encourage you to go read it. We have issued some updated guidance and cautioned our partners who are following the FISM strategy. So let me be clear. There are plenty of reasons to believe this market could keep going higher, and many people do believe the market will go higher when the news is coming up all roses and, there's very little negative things to talk about. There's over $7 trillion sitting on the sidelines in money market funds that could potentially come into the market, driving prices even higher. Tax cuts and deregulations mean more money in the hands of consumers and businesses as those things begin to play out over the coming months and years. Corporations are seeing less red tape, which can help them improve margins. I think of one example like pertaining to cars and the standards that cars have to be made by can increase the cost of a car by $6,000. Loosening those regulations doesn't mean that we're going to just start being very irresponsible from a climate perspective, but it does mean that car makers are going to have more latitude in how they build their cars, which is a good thing. Let the private market do the private market thing. But if we look at history as a guide, when everyone is overly optimistic, it pays to be cautious. There's an old Wall Street saying that says, be fearful when others are greedy and greedy when others are fearful. Now, neither fear nor greed are emotions that Christians are called to live by. We are called to walk in wisdom, to not be led by our wicked hearts or our emotions. We are to be grounded in our faith, not in market momentum. Christians are called to be grounded in faith, knowing that the Lord owns all things, and that he provides generously for his children. On every occasion and every topic, we should look to the wisdom of the Lord rather than adopting the wisdom, and I say that tongue-in-cheek, of the world, or in this case, the wisdom of Wall Street. As hard as it is to step back when everything seems to be going up, I believe now is a good time for investors to reassess. I'm not telling you to panic. I'm not telling you to sell everything and go to cash. I'm telling you to stick to your rules-based strategy. Consider rebalancing your portfolio back into alignment if you've drifted too far out of your allocations. And again, if you're a partner, read the commentary for practical suggestions on how to put this into practice. Well, I got a little bit more to get us caught up, but we'll have to pick that up on the other side of the break. Our phone lines are open if you want to get your call queued up. 610-363-1110 is the phone number to call. You'll be the first caller in the queue. Stick around. I'm your host, Shana Burke. We'll be back with more financial issues right after this.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
Most people have no idea what their money is funding. That's why it's so important to know who you're investing in and what they stand for. At Financial Issues, we help Christians invest with biblical values. We equip believers to manage their own portfolios, offering research-backed asset allocation models, biblically responsible stock recommendations, and practical guidance. If you're ready to align your faith with your finances, go to financialissues.org. That's financialissues.org.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back, everybody. If you're listening live, which is 8 to 9 a.m. Central Standard Time, 9 to 10 Eastern Time, then our phone lines are open and you can get your call queued up in the call queue. 610-363-1110 is the number to call. Now, if you're not listening to the program live, there's so many different ways that you can get the program. We're on most of your social media outlets. We do stream live on Facebook, YouTube, and Rumble. We do have our own phone app, so you can get us right on your phone. You can follow us on your favorite way to catch your podcast. We're on Apple and Spotify. So there's so many ways that you can catch us. You don't necessarily have to tune into the live show, but if you are tuned in and you've got a question, 610-363-1110 is the phone number to call. Well, let me get back to my thoughts on the latest economic and market moving news for the week. Let's take a look at the labor market and Trump's BLS shakeup. So this news actually broke last week, and I didn't hear a whole lot of it. It was a topic that popped up on mainstream media and then kind of fizzled out, but in my eyes it was really pretty significant. You've probably heard President Trump fired very publicly the head of the Bureau of Labor and Statistics last week. A lot of people, I would say the general public, mostly doesn't know much of anything and doesn't follow what the Bureau of Labor and Statistics does unless you're sort of a economic nerd geek like some of us, but I think it is big news. So I've been saying for a while that the economic numbers just haven't seemed to add up, or they were a bit confusing. It's very hard to make data-driven decisions like the Fed says that they do when you can't really trust how the data is being gathered. Sure, now I'm talking in relation to the non-farm payroll revisions numbers. Revisions happen, and they happen because of the way that the data is collected. Without getting too deep into the weeds of it, it's not real-time data. It's done through surveys and very, very outdated methods, and then when the real numbers start to come in, there's revisions made and different things like that. So what I'm trying to say is that the scale of revisions over the last few years has really been out of control. So it just makes it appear that someone doesn't know what they're doing or is not doing the job to the best of their ability. So there were millions of jobs that were originally reported that were quietly revised away. Now this happened last year in a really big way, and I thought that was very significant. So there are many asking now, was the firing of the head of the BLS political, or was it justified? There are those that say, Trump just wants to have somebody in there that's going to be a political puppet, just like we had during the last administration, but they'll be just saying a different message, or was it justified? That's currently up for debate. So it does seem pretty strange that the reports of millions of jobs being created under the Biden administration that were eventually revised away with the stroke of a pen gave Biden really good talking points on how to say how great his administration was and how many new jobs were being created. But then, there wasn't a whole lot of attention paid whenever they came back and said, well, maybe a million of those jobs really didn't exist at all. So, I guess there's no real proof at this point that the numbers have been manipulated, are reported fraudulently for political purposes, but there is no doubt in my mind that there has to be a better way of coming up with those numbers than the way that the government has done it through surveys, assumptions, adjustments, and models. So had the head of the BLS been focusing on doing her job to the best of her abilities, in my opinion, she would have been trying to figure out a way to make the numbers more reliable and not have these huge revisions. That should have been a huge red flag. Like, if we're reporting these numbers and then having to do these major revisions, what's wrong with our model? How can we do something different? How can we do a better job of getting the numbers right, even if it was not politically motivated in any way? So there's no reason that the leader of the BLS, this agency, should persist in living in the data dark ages when she has access to the kind of technology that's readily available today. There's no doubt that we need better methods than outdated surveys, models, and adjustments that the BLS has been using since the 1970s. There's no reason to still be collecting employment data like it's 1970 when it's 2025. What's on tap for next week? Well, here's what we're watching. We'll get the latest read on inflation. The CPI and PPI numbers for July will be reported next week, as well as retail sales, which gives us a key read on consumer behavior. And we'll hear the latest data collected about consumer sentiment, how Americans are feeling about the economy, because the way that Americans feel, or I would like to say the way that we think about what is happening in the economy, leads us to make decisions about how we spend or don't spend our money, how we save or don't save our money. So what does this mean for you? Well, the Fed is going to make another decision in September, another interest rate decision, and the Fed claims to be very data dependent. I think the Fed is data dependent on some somewhat questionable, maybe even flawed data, which has made them consistently late in recent history. A faltering labor market will give Powell the data he needs to make better decisions when he can see that data is actually happening real time. Now, whether he will make that decision or whether he will continue the feud between he and President Trump, refusing to give Trump what he wants, even if the data shows that, hey, that's probably the right thing to do, that is yet to be seen. So now that you're in the know about the recent and upcoming financial issues impacting you, we hope that you will learn more about how we can help you integrate those issues into your own stewardship. Find out more about how we can help you defund darkness with our biblically responsible investment strategy, and keep tuning in to be encouraged and edified to be a joyful, generous, and obedient giver. All the information about our ministry and our partnership can be found at financialissues.org. All right, folks, I mentioned it briefly in the first segment, but we do want to generate a lot of support for what we're trying to do here. So we issued a sell alert for Tesla recently, based on some activities that we have learned that Tesla does that do not align well with our Christian faith. And so, Tesla does have a policy of offering benefits to employees that enables them to have the company pay for some travel if they need to go get quote unquote health care in another state. We read between the lines. We know what that means. It means that Tesla is paying for people to go across state lines to get abortions when it is not legal in their state. We don't want the money that we've invested in Tesla to be used to support that kind of garbage. Tesla also has a policy of paying for transgender surgeries and along that line of benefits that they offer to their employees. So again, we don't want to be involved in those kind of things. When you invest in a company, when you buy shares of a company, you become an owner of that company. As an owner of the company, you want that company to operate in excellence and just do what they do. So, if you own Tesla, you want Tesla to make the best EV possible. You want them to sell a lot of it. You want them to also do the other things that they're engaged in, the robo-taxis and the robots and different things like that. So you don't want Tesla to be using shareholder dollars to fund agendas that you don't agree with. You don't want to be forced to be yoked with woke agendas. And so when we find out that a company is doing that, then we sell their stock. It's a personal decision that we want to honor the Lord by not allowing the dollars that we've been trusted to manage to be funneled toward a dark agenda. So we do it as an act of worship. We do biblically responsible investing as an act of worship, but then we want to be vocal about it. We want to speak up, and we want to let these companies know, hey, this is why we're not going to be, you can't count on us to be shareholders of your organization, and it's because of the things that you do. Would you please, we're not asking you to go down to the river and get baptized, as Dan used to always say, but we will pray to that end, but what we want you to do is just stay neutral. Don't use the money that I would invest it, or the money that the company has made that should rightfully be returned to the shareholders, to support these things that don't line up with our Christian values. Well, we ran close to the end. I think we're going to have to wait until the next segment to get to our stewardship verse of the day, which is sad for me because, that's a lot of times the most important part of the show, that we, that we talk about what the Bible says about money and about stewardship issues, and we encourage you to follow that and to be able to apply that into your own situation. So we do hope if you're watching live that you will stick around for the next segment, and if you are listening on an outlet that only carries the short version of the show, that you will find another way to get the whole entire show so that you can listen to this stewardship verse of the day. And those things, like I mentioned at the beginning, are we're on most social medias. The best way to get us is to download our phone app so that you can have us with you wherever you go. Listen to us on podcast. You can listen to current and past episodes, and follow us on social media. You can help us out there by going on and liking, subscribing, doing whatever you do on social media, because that tends to boost algorithms and it puts our content in front of more people like you who are like-minded, who want to honor God in their stewardship. They want to be good stewards so that one day they can hear, "Well done, good and faithful steward." Well, stick around if you're listening to the whole hour. If not, we wish you a good day. I'm your host, Shana Burt. We'll be back right after the break.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
I started investing close to 30 years ago now. All that time, I had never heard anyone talk about setting up your portfolio in a way that glorifies God. When I first heard about it, I was listening to the radio, a show called Financial Issues. They were teaching people how to honor God with their money. That made a lot of sense to me. I guard my heart, my mind. I watch my mouth, hoping to bring glory to God in everything I do and say. Well, why wouldn't I want to do the same with my money? I decided I wanted my portfolio to glorify God. I became a partner with Financial Issues, and it's been one of the best decisions I've made. I want to leave a legacy of godliness for those who are following in my footsteps. Invest your money in a God-honoring way. Go to financialissues.org.
When a woman comes into a center, she's being pressured from her family, from her friends, by her circumstances, by the rhetoric of the culture to believe that this is a quick and easy way out. If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity. And so we just encourage you to make a difference at whatever degree you can, whether you can do a $28 contribution for one ultrasound, whether you can underwrite an ultrasound machine for $15,000 or 10 ultrasound machines for $150,000. Where does the Lord have you so that you can make a difference?
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Welcome back to Financial Issues. Thanks for hanging around. We've got a lot to talk about today. We're going to get to our stewardship verse of the day, but first, let's get to a caller. They have been waiting so patiently. We're going to get to Nancy. Nancy's calling from Colorado Springs, Colorado. Hi, Nancy. You're live on Financial Issues.
Hi. This is the first time I heard about you. I just happened on to you, so I'm happy about that.
Oh, wow. Awesome.
Thanks for calling, Nancy. Welcome.
Thank you.
All right, Nancy, how can we help you? What's your question?
Well, I was calling to ask about XRP, if that's a call that you take. I don't know if you know about it or do that. But Kim Clement, many, many years ago, gave the letters X, and he didn't know the next one, but he said X blank P, and then also he recommended Tesla many, many years ago. So I believe he is a prophet of God. He's passed away now, but so anyway, I was considering buying some XRP, and I don't know if you do that or not.
So I am familiar with Kim Clement. One of the things that concerns me with prophecy and things like that is the advent of AI. So there's so many things out there that can be, even in mainstream media, clipping out a part of what someone says doesn't necessarily mean that it's in the right context. So it can be, skewed. I'm not saying that this particular thing is. I'm not familiar with the content that you've actually seen at all. Cryptocurrency is not part of our strategy in any big way at all. So you can't even, to my knowledge, now I'm not a crypto expert, but you can't really even buy XRP yet in a traditional brokerage account like an IRA or something like that. You're going to have to get on a crypto exchange like a Coinbase or a Binance or, something like that where you can actually buy it. It is a very, very speculative investment. So, we were kind of talking in the break. We saw the topic coming up, and I guess the guys in the control room have seen even prophecies, people saying, I saw in a dream that God told me to buy this or to buy that. What I'll say, I don't want to call anybody a false prophet, because especially without even hearing their testimony or anything like that. But what I will say is to be leery about that. So, when you're hearing information from a certain standpoint, think about what their motive is. So is their motive to tell all the Christians how to get rich and defy conventional wisdom and, do outlandish things? Or is it really more like, well, if a lot of people watch my video, I'm going to make a lot of money from the social media outlet that I'm on, especially if it goes viral or those kind of things. So, one of the prophecies that I believe in the Bible, it says in the last days, many are going to be deceived. And I think that the social media platforms that we have these days provide exactly the platform for making that happen. Anybody can get out there and say anything. And even with the advent of AI, people are starting to ask AI a lot of things and to not think for themselves and to not really dig in. And Seth mentioned, Seth, say what you said in the
Sure, Shana. Nancy, what's so important with something like this, anybody can come out and say, yeah, I heard this thing from God. As Christians, the first thing we have to say when someone says that is we have to align it with the revelation we already have from God, which is the Word of God. And if it lines up with that, that gives credence to it. If it doesn't, prophet. And Shana, I think you're exactly right. You have to look at the motives behind this and say, okay, there's some pretty leery motives behind this. I think a standpoint of caution and leeriness is very wise, very wise.
Yeah. So have people made a lot of money in crypto? Is there the potential for that to happen? Yes, there is. They have, and there potentially can be, because, the interest in crypto has made crypto prices go up. I can't find a lot of backing at this point, a lot of compelling reasons to be involved in crypto other than, hey, it's made a lot of people a lot of money, and, everybody thinks it's going to, or not everybody, but a lot of people think that it's going to continue to go up. So, our strategy is much more rooted in owning individual companies, companies that are tangible, that you can see, that you can feel. You can go buy their products, you can buy their services, you can listen to an annual report about how they've actually done in real life, how many widgets they've sold, what their expenses were in selling those widgets, what their projections are for the future, how different things that are happening in the economy are going to impact their business, whether that's the loosening of regulations or the tax refunds that a lot of people are, the bigger tax refunds that people are going to get, in the coming quarters. So, I'd rather live in that tangible world where I can see things, where I can have a relatively good idea of what's actually making an investment tick, rather than just saying, hey, there's this idea, because there's so much FOMO when it comes to cryptocurrency. There's so much, emotion that is packed in that. Hey, this has done so great, it's going to go up, and I think about all of the meme coin things, and it's just craziness. And I think it's a result of, there just being so much money out there, and it needs a place to go. So, it's like places for it to go are being invented all the time. So I hope that helps, Nancy. It's not a part of our strategy. I'm not saying that, I'm not calling out anybody to be a false prophet or anything like that, but I don't even know, hey, is this XRP thing, do you think this XRP thing is the thing that you were talking about? It could be something totally different. It could be taken out of context, and it could even be AI generated. Who knows?
Yeah. And Shana, what you just mentioned was so important to how something like this differs from our strategy. I tend to believe, I know you do too, our strategy is based upon what the scripture says. And the scripture talks about building wealth, not quickly, but little by little and with wisdom. So if anyone comes out and says, hey, I got this cryptocurrency, I'm predicting this thing, it's going to make you a lot of money, that automatically contradicts what the Bible says, because it's little by little, right? Mm-hmm. So I just think that's so important.
Yeah, you could end up getting into a company that goes up 1,000%. That's the case for some of the stocks that have been on our list over the last few years, but it's not for some really unfounded reason. It's based on real, tangible things.
Evidence.
So, yeah. So thanks for calling, Nancy. We're so glad that you found us.
Nancy.
All right, we need to shift gears into that stewardship verse of the day to get it in.
Sounds good. And Shana, why don't we do this before we do that, guys? Why don't we hold off on the ag today? That way we can have some ample time to actually get to it, Shana.
Okay.
Yep.
Thank you. I forgot about that.
Sure,
I was thinking, my clock's lagging because it says I have 3 minutes. All right.
You got some time. Yep.
Maybe we'll do it in the fourth segment.
Sounds
there.
good.
So, stewardship verse of the day comes from Psalm 37:21. The wicked borrows but does not pay back, but the righteous is generous and gives. Seth, what do you think?
Well, this is great, Shana. We've talked about this debt not being an evil thing. Debt is not inherently evil, but we have to be very careful, not only with how we use it, but how much we can borrow too, knowing the wicked, the Bible says, are the ones who borrow what they cannot pay back. So we got to be righteous. We got to be like God himself, generous with a giving heart. I think it's so important.
Yeah. There are some advisors, like financial advisors, or even advisors in Christian circles, that would have you believe that this verse stops short at the wicked borrows and somehow forbids Christians or discourages the use of debt. But that's just not the whole picture. This verse is not forbidding or even suggesting that Christians should never use debt or leverage. It is totally permissible, in my opinion, for a Christian to make a loan in good faith, meaning that they have thoughtfully counted the cost and they believe that they have the resources to make good on that debt or that loan in the manner that they promised to pay it back. For example, if you borrow money to buy a home or a car, you have faith that you will be able to exercise your time and talent in a useful way so that you will generate money in the future to pay off your debt. We call that work. And if circumstances change, you will be willing and able to sell or surrender that asset to satisfy the rest of the debt. I often say that if you have the resources to pay off what you owe, you are not actually in debt. You just have a loan. Resources that enable us to pay someone back include more than just money. It includes our God-given ability and our willingness to work. It includes equity in the object that you're purchasing, or perhaps value stored in other assets that you may own that you could sell to get the money to pay off the loan. On the other hand, I know a couple who even professed to be Christian. They knew that they were in over their heads with debt, and they were having trouble just servicing that debt, making their monthly payments. They planned to file bankruptcy, so they went out and maxed out all of their credit cards and lines of credit with the intent on only repaying the portion that the court was going to make them pay back under bankruptcy laws. This, in my opinion, was an evil act with evil intent. At best, they're irresponsible or deceived. At worst, they're just choosing evil. So what the verse gets here is to the heart of the matter. We want to be good stewards. We want to follow the scripture to the letter and be honest and righteous in all of our dealings. Well, stay tuned. We're going to be back with more financial issues right after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. Thanks for sticking with us all the way to the end. I'll mention that Tesla petition again. Whether you're a partner or not a partner, go to financialissues.org. Read the petition. You'll get a really great idea of, where our heart is on this matter and what we're trying to accomplish. And then whether you own Tesla or you don't, or you ever did, you can still sign the petition indicating that you want companies to remain neutral in the culture war, and that, we want to be able to have a lot of companies to invest in that are just doing good business. We don't want corporations in the culture war. So let me pick up a little bit. This was such a good verse of the day and such a good topic as it relates to stewardship. And, what our verse was getting to today is to the heart of the matter. The way that we steward resources, including debt, does not make us righteous or unrighteous. The only thing that can make us righteous at all is to believe in Jesus as our Savior and submit our lives to Him as Lord. How we exercise stewardship, especially when resources are limited, doesn't make us righteous. It reveals whether we are righteous or unrighteous. So it shows the world which God we serve. Do we serve the God of the Bible of Abraham, Isaac, and Jacob, or do we serve mammon or money? Let us be righteous by choosing to follow Jesus, and then by pointing the world to Him by being a good steward in all of our financial affairs. If you want to hear more about how following Jesus can make you a blessing to others by enabling you to exercise good stewardship, follow Financial Issues on social media, our podcast, or our live broadcast. If you want to go deeper and pursue stewardship in the way that you manage your investments, become a partner. It's just $132 a year. You can find out more about all of that at financialissues.org. All right. Bob's been waiting so patiently. Let's get to Bob. Bob's calling from Ohio. Hi, Bob. You're live on Financial Issues.
Hi, Shana. Good morning.
Good morning.
Just want to say thank you to the FISM team, and you guys are doing a great job. We appreciate you so much.
Thank you.
Thanks, Bob.
You're welcome. And so I appreciate the commentary. That was a great commentary, that most recent one. And my question is the fact that you want us to slow down on, investing a lot of money at this time, putting a lot of new money into the market at this time. But what my strategy has been is investing, just as like a future savings, about $2,000 to $2,500 a month in areas where I'm underweighted. Would you think that'd still be a good strategy to continue doing that regardless?
So I do like a disciplined strategy of dollar cost averaging. The other question that I would have is, which model are you following and how much do you keep in cash? So if you're adding new money in at all times and the market does pull back, and we're not really necessarily interested in what the market's doing, we're interested in the stocks and the positions that we invest in. So if those do pull back and you're regularly putting money in, you'll be able to take advantage of those. Now, if you're investing $2,000 or $2,500 a month to a $2 million portfolio, I think I would lean toward letting that cash build up a little bit over and above the target that we have published for our cash holdings. Now, if it's $2,000 or $2,500 on a $100,000 portfolio, I would just say continue doing things just as you've been doing. So you really have to put it in perspective. At this point in time, the guidance that we've suggested is especially things that we've taken off the buy list. So we sort of took a systematic approach and looked at valuations for the things that we removed off of the buy list recently. So, if you've bought those things and from an inside perspective, knowing when we put them on the buy list and how much you might be potentially up, we know what that does to a portfolio. Returns have been really concentrated in a certain sector like the Mag 7 and the AI related sectors. And so we're operating on the assumption that those parts of your portfolio are now much larger than they probably should be. So again, as I said in the commentary, we may be a little bit early on this. We may see the markets continue to go up, but it's just there's cause for pause for me, and it really just depends. I'm not suggesting you go 50% cash or 40% cash. I would take a look at your portfolio tracker, and if your target is 6, maybe you increase that to 10, 15, or 20, just depending on your own personal comfort level and your own risk tolerance. If you're young, and like I said, if you're younger, that means that your portfolio is probably smaller. And so if you're putting in $2,000 to $2,500 a month, that represents a much larger percentage of your overall portfolio. So, go ahead. It all depends on where you are, what the size of your portfolio is, especially in this case. Make good sense.
Question. Have a great weekend.
Thanks, Bob.
Awesome. Thanks, Bob. That's great.
All right. So he kind of forced us to reveal our hand a little bit on what we're suggesting to partners, but that's okay. I mean, this is, this is for the general audience, and, it's sometimes hard to read between the lines on what we're telling our partners to do if you don't know. And this isn't intended to scare you, and I'm not trying to call the top of the market and tell everybody to time the market and get out, because if you know anything about our strategy, you know that that's not our strategy at all. We don't try to time the market. So all I'm saying is to be a little bit cautious right now. It's always good to have dry powder because, market pullbacks do come. And when extended pullbacks come, it's typically for a pretty good reason. And the companies that tend to get hit the most from a price perspective are the ones that are the most overextended from a value standpoint. So, all right.
Good stuff, Shana.
I don't know. Do we even have time for
Daryl from Texas? There, we might have time, Shana. I would say let's see what's on Daryl's mind.
Let's see if we can get to it.
Okay, sounds good.
Hey, Daryl, you're live on Financial Issues.
Good morning. This will be rapid fire. Utilities, including some of the one on our buy list, like UT 37 and 46, they're at or near all-time highs. Traditionally, they kind of go, utility stocks go, the values go up as interest rates come down. Being at all-time highs already, do you kind of feel we're range bound as far as when Fed rates go down, that utilities will continue to act like they normally do?
Well, utilities haven't acted like they normally do for a while now. Utilities used to be defensive. They used to be, they're in a regulated industry, so we kind of knew what to expect. And the behavior that you described describes how they have historically acted. Utilities is a sector of the economy that is benefiting greatly from the advent of AI. So we need energy. We need lots of energy for AI, and we're going to need it for a long time. So the utility companies that we've seen just skyrocket. I mean, utilities in my mind is no longer the defensive income play. It's more of a growth play. So you'll notice that's one of the reasons that we've decreased the weighting to utilities in some of the more conservative income-based models and increase it in some of the growth models. So, I really don't like to make short-term calls. I do think that a lot of the utility companies, especially the ones that we've seen big moves in, has been AI related. And as long as that trend is in place, which I think it is a long-term, decade long trend, I do think those companies are going to continue to go up. But on the flip side of that, a lot of their valuations have skyrocketed out of what is prudent ranges, I guess. And so that's behind our ideas here. We want to stick to the basic tenets of our investment philosophy, and we think that if we don't want to be like a strict Pharisee rule follower, but we do believe that guidelines are made to be followed. So we don't want to get overextended. We don't want to let greed creep into our heart and cause us to stay in positions long past the time when it seemed prudent to get out. Now, we're not suggesting that you sell those positions. We're just suggesting that you trim them back to a reasonable part of your portfolio.
Understood. Do you think that the ones that have higher interest rates or dividend rates will respond more to the Fed cuts than the other ones? Or I'm not expecting to pull out a crystal ball or anything, but
yeah. Now, I mean, the reason that we invest in companies that pay high yields is because we're after the income. So the things that are going to stay on our buy list, we have reasonable or valid reasons to believe that they can continue to do exactly what we put them on the buy list to do. We're out of time today. Thanks for your question, Daryl. Appreciate that so much. And everybody else that called in, y'all made it a real rapid fire Friday today. So I hope that you have a wonderful day of worship on Sunday. I hope you get to spend some time doing the things that you love with the people that you love this weekend. And tune in next Monday. We're going to be back, Lord willing, to remind you that time is getting short. The Master is coming back. We're going to have a test about how we handle the time, talent, and treasure that we were trusted to manage. And our goal is to be here to help you navigate your financial issues so that you will be found a good and faithful steward when you face that test. Find out more about our ministry at financialissues.org, and we'll see you next week.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.